Hey folks, Vic here with a weekly trade video for the week ending March the 5th, 2021. In this video, I'm going to show you a great setup that happened on March the 4th. Actually, it was filled in late Asia, which was March 3rd in North America. The reason I want to show you this video is to underscore the importance of getting a good reward risk on your trades, right? Because it can be psychologically challenging to let your trades run, because you start thinking about what could happen, and hey, like I'm up 10 or 20 pips, so I better click out and be sure to book a profit. Can't go wrong, right? You're never going to get your account growing with that attitude. You need to accept the fact that losses will happen, but so will wins. And if you have a good methodology, you're also going to have not just winners, but some really big winners on some trades, right? Big reward risk profits. So let's take a look at a trade that's set up just the way that we want to see it according to our trading rules, and then I'll show you a way of handling the trade so that it becomes much easier to stay with the trade from a psychological viewpoint. Okay, the trade took place on the 4th of March, and it was on the Euro Swiss pair, this one you're looking at right here. We always start off with the big picture. If you look at the weekly chart, I know we're scalping, but this just gives us a general sense of what's happening. This is a weekly chart in the upper left. I mean, if I said to you, what's the trend? I mean, all this breakout here, it's heading up strongly. This is heading up. If you look at the daily chart, and I said, what's the trend? Would you say it's down? No, it's up. It's pretty obviously up. Where do these lines come from? I provide these levels every single day for our members because they're levels that have produced moves in the past. And like you can see, price hit this level and rejected, hit this level and rejected, although we're in an uptrend. So we're thinking more about buying than selling. Now, let me show you where these came from. If you go back in this level back here, with the price making these new highs like it has been, we have to go back quite a ways to find where is it reacting from. And this is a super good level right here. It was support here and here, and it finally broke, and it's never been back. Same as this level. Look at this, a really good level of resistance. We want to keep an eye on it for reference, for the possibility of getting a trade set up. So that's the daily chart. On the 4-hour chart, it's the same story. I mean, this thing is heading up, right? It's goes up, comes back, goes up, comes back. And when it comes back, you can see that this was a really good level on the 4-hour as well. And if we go down to our 15-minute chart, this is our entry time frame for scalping, then that was right over here. And this is how we construct our trade. You can see price is going up, it's taking out this high, it's bullish, it finally comes back to this level again. And when it does that, that's where we like to buy. Okay, when it's coming down, buying it on a limit order. When this needed only 11 pip risk and it went all the way up, this is an opposing level on the daily chart. Okay, that was worth 63 pips. On an 11 pip risk, it's a 5.7 to 1 reward risk. That's a fantastically good trade. Now, here's the thing about that. Now, you look at this and you go, okay, well, that's great. Well, listen, when this is going up and coming down and going up and coming down, it plays on your mind psychologically. Okay, you don't know what's going to happen, and people get nervous, and psychologically it's difficult to hang on to. So here's a few points to make. And listen, I'm not saying that you need to have an all or nothing approach. Like, if you get in here, hold the entire position up to here, you got a 5.7 to 1. And that's fine. That's a fine way to trade. But it's okay to get your trade to a no-lose position when it's logical to do that. Psychologically, it's much easier to hang on to a trade longer once you've removed the risk. Okay? What I recommend is, for our students, is to take a profit on half of your position once you have a 1-to-1 reward risk. Okay, you can always, listen, when you get more experience and all that kind of thing, you can change your trade management approach. No sweat. It takes time to find out more about yourself in terms of what you're comfortable with and the confidence level you have in the trading system and all that kind of stuff. So by taking a profit at 1-to-1, now you can move your stop on the remaining half so that you can't lose on the trade. Whether you put it at your entry price or slightly below your entry, it doesn't matter. Just place it so you can't lose on the trade. And then you can sit back and see if it goes to these levels. So, for example, in this trade, rather than an all or nothing 5.7 to 1 reward risk, you could have taken half your profit once you were up 11 pips. 11 pips was our initial risk. And then the other half, you can take it at your target. And we always front run these targets a little bit, which was about 63 pips. Okay, so that's a total of 74 pips, 11 plus 63, right? That's an average of 37 pips. The initial risk was 11 pips. That's well over a 3 to 1 reward risk profit, which is just excellent. So I hope this video is effective in helping you see the value of reaching for a good reward risk profit, and at the same time being able to go for it in a safe way by getting the position to a risk-free trade relatively quickly, by using a 1-to-1 profit on half the position. And this is just an idea, right? I mean, there are tons of ways to manage trades, and as you develop further, obviously you can change to an approach that's the most suitable for you and your psychological makeup. Alrighty, thanks for listening. I really do hope this video was helpful. If you liked it, please hit the like button and be sure to subscribe to our channel. And that's it. Thanks so much. Have a great week and see you next week with more videos.